listen, this is what I always say. It's not about the ideas, it's about the problems. That's really the best thing I can say is, as much as we say we're looking for ideas, we're not looking for ideas. We're looking for problems. And where it starts is always, and we are, I would say, borderline religious about this because it's really critical. The first step is always understanding the pain point, the customer, who's feeling that pain point, not just the organization, but who in the organization and what is that person's objective and what is their reality. And I think if you stay too focused on looking for an idea, you can be very enamored with, oh, well, we'll just take, this cool feature that this company or this platform has, and, we'll mash this with that. And it's like anyone can come up with an idea, right? The important thing is, does that solve someone's problem? Is that a top 3 problem? Are they willing to pay to solve that problem? How much? And, what's it going to take to get them on?
It's a tool. And right now, as the AI stands, it actually has no intent, right? The intent is given. The objective is given. The one thing I will say is feedback is important. So that's one thing I learned, particularly building on these new tech, on large language models, is how do you expose what it is doing a little more, so that it is a little bit unfair to put the full responsibility on the initial user who creates that prompt, because we just don't know the outcome yet. So we're trying to create that prompt outcome mapping, and we don't know that full mapping yet. And so as we design these systems, I would say it's not that we should stop the progression of this technology. It's more so we should open up the boxes of these things and then safeguards or just let us know what is going on so that we can understand that mapping. Because we're all about cause and effect. We are cause and effect machines, right? That's what our whole history of survival is about.
If you're the kind of person that always questions, why is it that things are the way that people say they are, I'm going to say that that is, to me, something that I look for in entrepreneurs today. When you kind of strip it down to its core, what does that actually mean? And sure, there are a few verticals, right? Like there's the risk taking, there's the structuring, but at its core, an entrepreneur is a person that looks at some, convention. The world says things work this way, and that person goes, bullshit. No, they don't. And no, they don't have to. I'll have a better way. And if you're of that kind of mindset, you're going to be very impatient with repetition and replicating type work, because you're always going to want to rejig things and kind of think through why they work. Why do they make sense? How do we make them better? And to me, that was the driver. That was the thing that drove me nuts and made me take that risk of kind of quitting my job. And what was it specifically about blockchain? I can also tell you, it was not even the tech per se, even though the tech was the enabler. It was the profound insight that we finally had a framework that changed some very fundamental aspects of human interaction.
I think it was 1 or 1.3% of the total amount of funding raised by VCs went to women, female-led funds. So to rephrase, it was of 165 billion raised for VC funds last year, 1.6% went to female-led funds. The rest were male-led funds, which means that the people that are like me sitting there making decisions with capital, the teams that are making those decisions are mostly male, like 98% male. So that's the top down, and that's the reality. And then you look at, and these were all things I investigated before I started Spice. Then you look at the founder side and you say, okay, in 2022, women-led teams got 2% of venture funding, total venture funding. And so there's a gap on both sides. My philosophy is to make any sort of change in the world, you almost have to make these things feel like a meme, or you have to make them feel cool, or you have to make them feel, you have to give people a feeling. Like feeling is what drives people to take action. And for me, what I really wanted was female founders in my fund, female investors in my fund, female technology enthusiasts, or just people who had some money to spare who wanted to take risk to be in my fund, because essentially I wanted to expose them to what the latest new things in tech were.
I think there is one theme that I wanted to bring out is in the realm of human capital, is that there is this idea people talk about intellectual capital and all of this. I think there is this notion of inspiration capital, which is very hard to sort of capture. What it means is that your presence, your work, your ability to connect and deliver value should act as an inspiration, not so much your words, right? Words are part of it. It's a communication tool. So you have to have the drive and the vision and you're passionate. That's there. That's a part of it. And the second piece is compassion. And compassion is where you bring trust, ability to be authentic and collaborate, understanding that people are in different places in their journey of building a company or in leadership, right? So giving the space and the platform for people to do their best work and learn and grow in that realm. The last one is dispassion. It's having that understanding that maybe it didn't work, it's fine. You let go and move on to the next challenge, the next opportunity. And creating a culture around these three principles. You need passion to drive outcome and results and sort of create momentum, right? But from a culture perspective, having that understanding, the kindness, the compassion, that people are going to be in different places, and then having a mindset where you are able to deal with failure quickly and move on.
Pre-product market fit, you should be thinking about nothing but product. Once you've found product market fit, it's really about finding that first channel for growth and settling into, now that's when you settle into company building. That's when we start to build a team, some semblance of a leadership team, try and figure out some repeatable go-to-market motion, and then let's settle into making sausages, right? From the point of view of a late-stage investor, the ultimate pitch is like, I've figured this out. I've figured out the recipe. I know exactly where to go to get customers, how long they stick around, how much they're worth, therefore how much I can pay for them. I've got proven repeatable channels to go and find lots of these customers. And I've got the team, particularly the leadership team, to make this recipe over and over again. So in essence, I can make 10 sausages today. Give me your money. I can make 100 sausages and they all taste the same. So an investor that sees that and then validates that backs up the Brinks truck and unloads, right? Because that is actually the holy grail of venture, is when I can generate venture returns without venture.
The emphasis on how meticulous Stripe was about the foundations of our craft, regardless of engineering, product, recruiting, it didn't matter. There was just so much emphasis on that, and that translated into everything that we did. So you just wanted to be along for the ride. You didn't care what you did there. You just wanted to be part of the company and part of the growth journey. And I think it's where I really found out what best looks like and how to do things well. That's not to say we didn't make a million mistakes along the way. We did, as most companies growing that quickly do. But it was just a crash course, daily humbling experience of how things are done well, how the fundamentals are done well.
There's three pillars of success: access to capital, access to talent, and then access to customers and markets. Back in 2010, all three were broken. And I'd say over the last decade, there's been a lot of effort trying to fix the access to capital, to the point that I did declare by 2019, the problem was over, largely. That problem might restart, by the way, now with the very tight fundraising market. But let's just say that was a monstrous difference compared to the past. And on the access to talent, we have the highest level of quality of talent in the world. Anybody who says otherwise has not been around the world. I have question will be, do we have enough of the volume? Number one. Number two, one of the things that's starting to bother me a little bit, back again over 10 years ago, our top talent in the universities were leaving to go to US based positions, either in the US or actually US based in Canada. And because a lot of the Canadian startups are starting to show lots of weakness, I worry that we're going to run into that problem again. And in which case, here we are building the talent and then losing the talent, and perhaps permanently losing the talent when they move to the United States.
Probably the number one killer of early stage startups is what I've called a false start. The entrepreneurial version of the false start is you start building and you build and sell the thing before you've actually figured out, is there a strong unmet need for the thing? And is that, if there is indeed a strong unmet need, is the solution you've devised actually the best solution? Second, which given your background will probably resonate, I call bad bedfellows. And it is some combination of the key resource providers in the venture. And by that, I mean the co-founders, the rest of the senior team, the outside investors, and any strategic partners, dysfunctional relationships between those parties. The third early stage pattern is a false positive, and we are unfortunately all familiar with false positives and false negatives after COVID. Entrepreneurs are subject to the same. A false negative is you thought you got a signal when you were launching the thing that this wasn't going to work and you stopped. Positive is you think you're on the right track, but you're not, and you spend too much time, too much money, too much effort moving in the wrong direction. We're talking late stage sort of series B, C, and beyond. The key killer failure pattern is a speed trap, where basically you get some early momentum. VCs pour a bunch of money into your company, expecting continued growth. You as an entrepreneur love growth, so you didn't need to have your arm twisted. And bunch of bad things can happen when a company grows really fast. There's another pattern, I call it help wanted, and it's help of two forms, right? When you get bigger, you need specialists. And if you're in the direct to consumer business and you're running a warehouse and you're shipping things, you really need somebody who actually understands how to run a warehouse. Part two is sometimes the capital markets turn on you in ways you simply can't predict. The last failure pattern I call cascading miracles. These ventures have a bunch of things that are new and different and need to go right.